Happy Monday to you. We're right back at it. Hopefully, you had a good weekend. Let's go ahead and get started. My name is James Boyd. This is our class for every Monday. It's not just a one off class, and we talk about at this time trading with technical indicators. So, today, what I really want to talk about is not trading with an indicator, but talk about using multiple indicators at once. And what is it that you're really trying to get from using multiple indicators at once? I say that because some investors might be maybe just focused on OBV or a MACD or an RSI. Some investors don't just use one, they're using a combination. I want to talk about that here today, and I want to talk about some example trades and investments from that discussion. We also have Brett Crowther in the chat. We welcome him as here as well. You'll see his initials as BC. And also like to welcome all of you, Ricebird, Debbie, Chris B, Bob, High Speed, Naresh, and many others. Welcome to all. Now, I will be in throughout the week. Quick heads up. Next Monday should be Labor Day weekend. Okay, so I believe we will not be here. If it's Labor Day next week, so if the markets ever close, we are closed as well. Now, just real quick as we hop right in. Remember, the information here is for general informational purposes only. Also should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Also remember, when we talk about options, or if we do, options carry a high level of risk, not suitable for all investors. Also, when we talk about examples, we will do those on the Paper Money software application. And also investing involves risk, including loss of principal. So what I want to really do here today is we'll take a quick gander at the market. We're going to also then talk about what are some of these indicators and how do we use them in combination to create a buy or sell decision. And I want to talk about nice and slow. What do we look at? Why do we look at it? And how does it help to make a decision? Okay. So first off, let's go ahead here and just hop right in. And I'm just going to pull up first off. I want to go to just real quick, the market watch just real quick. And I want to go to indexes, okay? So sometimes it's interesting how we're all different people, okay? And someone has to be right. Might as well be you, okay? Now, how many of you want to volunteer to be right? Okay, good. Now, here's the deal. What I want to do is I want to first now, some people like to look at data, like statistical numbers. Other people want to look at the chart, okay? So if we were just going to look at the numbers, okay? And we're going to kind of talk about this is going to be getting into looking at the indicators in combination. When I first look at the index list that we made, the first thing that I look at is that trend column. The first trend column is the trend daily, okay, daily. That is, and by the way, if we see, for example, that we have threes, we get price above both moving averages, not near resistance. We get a whole bunch of ones, which is not the investors' at least in the short term. It's not a bullish investor's best friend when trends are in number one, because that means the prices are below both moving averages, okay, which means you have negative momentum and negative trend. And when you see that we have four, that means the price is above both moving averages, the 10-day exponential, 30-day simple, but it could be up near an area of resistance. That is the number one column that I'm looking at when we first look at these column headings, okay? If I said with this second one, trend weekly, I'll just label it as TW, I don't look at that as much, okay? If we're talking about doing a class and we're talking about trading and things like that, I look at that as a secondary, but if someone said, hey, what do you think of the weekly chart? We have that there as well, but that's not something I'm really looking at really on a daily basis. It's more of a reference. The also thing I want to kind of point out here is when I'm looking at week percent or year date, whatever we want to look at, I'm not really looking at that as much, okay? It's a reference point, but it's not something that's really going to give us a trading decision. It's kind of like, hey, what's the weekly percent or what's the year percent? It's just like for reference, okay? Now, where it gets more into kind of something interesting is we get into the relative strength, okay? And when we get into the RS, short for relative strength, now we get into something more material. Because now we're starting to kind of see performance relative to the S&P 500. So notice I labeled, what are we looking at the most? The trend column. That's telling us something about momentum and current trend. Second thing we're looking at is this data set here where we can see the relative strength. And I want to ask you something. Where do we see the relative strength? If we're talking about indexes, how do the indicators really help us see? And by the way, when we look at this is relative strength compared to the S&P 500. And if we were to look at the Dow Jones, we were to look at the Russell, et cetera, what you're now going to notice is in the last, let's say, 21 days, the Dow was underperforming. That's why it was red. The Russell was in line with the S&P. But the big difference we've seen in the last, let's say, 2 weeks, 5 days would be 1 week, 10 days would be 2 weeks. What we've seen is a pretty good jump where we've seen investors get back in the area, okay, of the Dow, Dow, and the Russell. Now, if we looked and said, well, where's the S&P? Well, the S&P is down here. Where's the NASDAQ? It's right here. And if you look at the last 2 weeks, there's been a pretty good difference, okay, with what we've been seeing in the Dow and the Russell compared to the S&P and the NASDAQ. Now, that doesn't mean that all NASDAQ stocks are falling down. That doesn't mean that all the S&P stocks are falling down. No one ever said that, okay? But they're when we see that we have red boxes, the NASDAQ is underperforming the S&P, and why are we actually, and by the way, that's the SOX that's underperforming. We don't have any line right there for the S&P because it's the S&P compared to itself, okay? So let me repeat this. When you look at these columns, what are we looking at first? We are looking at the trend column first. Again, that tells us something about momentum and it tells us something about trend, okay? Second, what are we looking at second? We are looking at the relative strength over time, and we're asking ourselves, where is the money? Where has it been flowing? And maybe where is it currently flowing, okay? Now, third, when we talk about that, I'm going to label this as 3, okay? When we talk about the CAH, we're talking about hold. This is what we call bullish bounce. If we talked about, for example, the 20DH or the 55DH, this would be number 4 that we're looking at. The 3, we're talking about a bounce, okay? That's a bounce. Now, by the way, that script, that's an indicator looking for, and we're going to look at some examples of this. That's the bounce, okay, setup. Now, by the way, that we're talking about a bullish bounce, okay? When we talk about 20DH or 55DH, day high, that stands for, 20 would be about 1 month, 55 would be about 2.5 months. We're talking about stocks that are making brand new highs. So in those columns, we're really talking about breakouts, okay? This right here is really talking about, and I'll back this chart off for just a sec, but this is just kind of showing us crossovers, moving average crossovers. The 5th, we're just going to label it as the MA for moving average, okay, crossover. Some people like to look at that. And last but not least, this is the 6th thing that we actually look at on a daily basis. And it's just really counting the number of days since the moving averages have crossed up, hence green, or the number of days that have crossed down, hence red. So if you said to us and said, hey, after everything that you know, some investors saying, how do you bring the indicators together? Well, we don't just look at one, because one indicator is not going to tell you everything. But you start to get an idea of the trend, the relative strength that can lead to bounces, breakouts, or crosses. Now you start to get a bigger picture of what's going on and what you want to invest and trade in, okay? So if someone said, hey, on this class, do you like to spend time on looking at OBV? I know a guy that, man, all he did is look at OBV. The problem with that, I don't think it really tells you the full picture, okay? So when we look at trend, it's giving us an idea of momentum and trend. When we look at the relative strength, it's giving us an idea of momentum and trend relative to the S&P 500, which you can adjust. And then if that trend and momentum was that strong, we're now looking over here on the right-hand side. And that right-hand side is getting into, is there a bounce setup, a breakout / crossover? Now, wait, could a bounce up be a crossover? Of course. Could a breakout be a crossover? Of course. So you could really say it comes back to bounces or breakouts. Okay, time out. Okay, time out. Let's everyone huddle. Huddle up. Huddle up. Okay. Speaking of college football this weekend, feel bad for those Florida State Seminoles. Ooh, that must have been a long way home to Tallahassee. Now, here's the deal. Now, Orlando's a Gator fan, so he probably enjoyed that. Okay. Any questions? Any questions? Now, you might kind of be wondering, well, where do we get those column headings? Now, if you haven't been with us before, welcome. Okay. So right at the very top of my X page, you're going to see that you can pick and choose which one of those scripts that you want to see. Oh, my gosh. John says, go Yellow Jackets. John, I knew they had them. When they were winning in the trenches, I was like, this is going to be – I've seen this movie before, okay? Those big guys up front, they just do not get enough credit. That whole thing was won in the trenches. Beautiful, by the way, if you like that. Now, here's the deal. So when you go to the very top of this X page, you're going to see that we have some of these scripts, and I posted them right here, okay? Now, what I want to do is it's one thing to talk about an indicator, okay? But what I want to know as an investor is if I use maybe some indicators, how much statistical difference is it compared to just buying the benchmark itself? I mean, if the OBV is so good, show me a history of 1, 3, 5, 10 years of where that OBV has outperformed the benchmark from a portfolio perspective. People don't talk about that. Why don't they talk about it? Well, because they showed you 2 trades and maybe 3 trades, 4 trades, 5 trades, showed you how it worked. But that 1, 2, 3, 5 trades was not over a portfolio. How do you use the indicators in combination and build a portfolio out of that and then benchmark that compared to the S&P? Now we're talking like professionals now, not just amateurs that want to know about an indicator. That's not very helpful. Okay, so we got to use the indicators in combination to build a portfolio. Speaking of that, okay, so if someone said, James, on my on this list here, where do I see the 1 week, 1 month there? Where do I actually now wonder if I don't want, let's say, the year? I want year to date there. Where do I see the trend daily there? Where do I actually see, for example, the relative strength 5 through 63 there? Where do I see Caholt there? The reason I'm pointing this out is when people see this, when you see everything, you see nothing. So if someone said, well, I don't see where's the 20-day high there, where's the 55-day high there, where's the, for example, the moving average, okay? Where do I get the crossover there, okay? So the moral of the story is when you start to go down through it, you could start to pick it out. I'm just pointing out maybe questions someone might have and then saying, where is it? Now, the lighter blue color, okay, that is the script for that column heading, okay? Now, what I would like to do, and really what the goal is not to become an indicator professional. I've seen people that, man, they just do everything about indicators, but they didn't trade anything, okay? I want to show you how we can use these indicators to make trades and investments to build a portfolio to compare to a benchmark of the S&P 500. Speaking of that, let's do that. Now, one of the sectors, and let's go to sectors for just really quick, is one of the sectors. Now, if someone were to ask you a question, hey, you've been watching the market, what sectors have you been watching in terms of momentum and or trend? Now, in the market that we've seen as of lately, there's been a, as Bill would say, a plethora of examples that we could pull from. And the reason I'm doing this is I think sometimes investors, it just takes too stinking long to find it. And I'm going to tell you right now, if you did what we talked about, okay, it wouldn't take that long, okay? What you're now going to see is if I look at that trend column, that's the first thing that we're going to look for. What's the first thing I look for? Trend column. What's the first thing I look for? Trend column. Again, that's telling us something about momentum and trend. The only sector that is really showing maybe something where it could be up near an area of resistance is really the technology sector. Everything else is showing green, 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 lots of green. What's your favorite color, okay? Now, if I pulled up a couple examples, I want to kind of pull from just a second, okay, this area of financials. Now, we've heard from last week, they're talking about cutting interest rates, et cetera, et cetera, et cetera, okay, trend 3. And then we actually look at the relative strength. You're going to see in the last 2 weeks, we've seen pretty strong strength coming from real estate, but also in that same space, which by the way, you could kind of tuck real estate underneath the umbrella of financials. Last 2 weeks, we've had financials be quite strong and also real estate been quite strong. Now, if we said on either one of those, which one is kind of showing a bounce, which we label as hold and or a breakout? Well, the one that's doing that, both. We'd have to, scripts are not guaranteed for accuracy. We would need to verify that. Well, it's going to be the financial space. Okay. So now this now begs the question. Could someone just buy the financial sector itself? That's an option. It's one way to do it. Could, for example, someone maybe play, let's say, the financial stocks themselves? And they could, okay? The other thing to kind of notice is here, what you're going to notice is how many days have the moving averages been green? They've been green for 12 days, okay? Now, I want to kind of show this. How do you maybe find stocks that might be showing that? I'm talking about stocks now, okay? So one way we could actually do this is we can go to the scan tab. Now, I know some of you love to scan. If you ask me, do I like to search? The way I'm showing you is the way we search, okay? But if you said, I like to do this scan, okay? What I'm going to do is I'm going to go to the scan tab because you might have a question on that. We're now going to go to scan in, and we're going to say scan the S&P 500, okay? And we're going to say go in the neighborhood of, let's say, financial stocks. Okay, so notice I'm going to leave that right there. We're going to do 2 trades in the financial space using indicators in combination with each other. Okay, now when I do this by industry, financials, we're going to just say, look, hit me with all of them. Okay, not a hater of anything, just anything that's going up, let me know. Select all financials. Now, the only criteria we're really putting in here is very basic criteria. You got to understand this volume is not average volume. This is volume as of the day. So if you did this in the first 5, 10 minutes, etc., you need to consider that. It would be nice if we had average volume there. This is not. This is just volume. Okay. Now I'm going to say scan in. Now what happens now is we get, let's say, 55 stocks back. That's a little much. Okay. Now what I could do is if I'm getting too many back, I'm going to bump this to 500,000. Scan again. Once I do that, okay, by doing a higher amount of volume, I'm only now getting, let's say, 26 stocks, okay? Now, what I'm going to do is I'm going to click on the 3 lines. I'm going to say save as a watch list. I'm going to click on that, save as a watch list. Now, what I'm going to do this is I'm going to call this indicator webcast, okay? Save. Now, all we had to do right there is click on the 3 lines, save as a watch list. Where's the watch list go? That's always the question, right? Go to Market Watch. Go right back to your watch list, okay? When we say watch list, it's our personal watch list. And I'm going to say here in this case, I'm going to go down to the indicator webcast, and here's our stocks, okay? Now, I want to kind of speak to this. If this was our list as a class, and it is, which stock now stands out? Well, remember, the deciding factor is probably not going to be trend, because there's a lot of stocks in there that are showing strong trends. Okay, so that's not going to be a deciding factor. Lots of options. If we were to say, hey, James, which stocks in here are maybe showing pretty strong strength? Aflac has been quite strong. AIG has been quite strong in the last 2 weeks. Allstate has been quite strong over multiple periods of time. And if we said, how many of those stocks are bouncing? Many of them. So when I look at trend, I'm not really kind of getting something that's going to kind of say, which one am I going to pick, one or the other? If I look at, let's say, relative strength, I'm not even sure if I'm going to really say that there's one better than the other. I think we come down and there's a couple stocks in here that really have strong relative strength. And if I said over time, which ones kind of have stronger relative strength? I think we could probably get it down to about 3, 4, 5, about 7 stocks that over a longer period of time have shown strength, okay, over more periods of time. 7. From those 7, which ones are showing bounces and breakouts. Let's see how many we can get it down to. 3, 4, 5. Okay. So we can really go from, let's say, 7 stocks, maybe down to about 5 stocks. Now, the one that's kind of also kind of showing us something here is you're going to see that this one is, we've only been green for 1 day on the moving average. Now, is that better? Dangerous word, right? Better. What does that even mean compared to who? Well, the problem with better is if it's only been up for 1 day, maybe it's just going to go down tomorrow. Okay. Some might say I'd rather see something maybe with 2 days green, 3 days green, and so on. Okay. Some people want kind of more confirmation, like 2 days, right? Something where it's not just a 1 day wonder, but it's been going up for more days. Now, I'm also going to kind of bring up a stock that might be a little different. It's had quite a bit of relative strength here, okay, which is AXP. And it's really showing a moving average where it's been down for 3 days. Now, I'm going to kind of show you a little difference. We have just been talking about looking for stocks that have shown the strength. Fine. What I'm also going to show you is sometimes when you see stocks in a trend number 4 condition, you might think, well, that's horrible. That's not true, because those could be some stocks that might be doing what we call a continuation pattern. So I'm going to show that as well. Okay. Now, one of the stocks that I want to bring up, okay, is I want to bring up a stock like Goldman Sachs, and I'm going to kind of put it right here. Okay. Now, if we kind of say Goldman Sachs, why are we going to look at that? Well, it's been up for 1 day. 1 day. It's showing a bullish bounce, noted. Relative strength has been quite good. Okay. Now, let's look at this chart together. Now, the point of the indicator is not to become a mad scientist with indicators. The point of the indicator is to create a buy or sell decision, right? Now, so here's what we're going to do. When I look at this chart, what I want to notice now is, what do we see on the charts? Now, by the way, if you say, James, I don't have this chart, and I feel sad about that, and you should feel sad about it. I see what you mean. I'm only going to just have the price. Okay. And I'm going to send this to you. And this is just the moving averages. Okay. There it is. Okay. I'm going to go back to this chart. Now, when someone looks at this, they might say, well, James, this is dumb. The stock is down today, so it's not bullish. That's not true. Okay. Think about it like this. Let's say you had $10,000 in your checking account. You spent $1 today. You bought a soda. Does that mean your checking account is down? Well, when you put it in that reference, I mean, yes, it had a withdrawal or a debit. That doesn't mean your checking account is downtrending. Take that same analogy and apply it to stocks. If we're down $1.73 today on a $500 stock, does it really mean it's downtrending? Same thing, right? So the reason I'm kind of pointing this out is what you're going to notice on a stock like this is we kind of see that we're back down at the middle of Friday's range. Now, why are we pointing that out? Now, last week, we talked about patterns, and we talked about V patterns, W patterns, channels, right? And I'm telling you, the stuff that we've talked about in the last 2 weeks has been timely in terms of patterns and then what we've been seeing in the market. The other thing we kind of talked about is when we look at the moving average, the shorter term moving average, that's correct. We're confirming it's been up for a day. Okay. Now, how do we know if it's been up for a day? How do we know that it's going to go up? We don't know that. Okay. We're looking to see if it can go up. And you're going to see that the prior area is kind of a high or resistance is about right there. It's about $510. Now, that $510 might be a level of resistance. We had a strong candle on Friday, okay? Smashing into that wall of resistance. Today, giving a little back. Now, some of you have never done this before. I want you to practice with us in a paper money example. We know that if you go down $1 or $2, it doesn't mean it broke support. Okay. What we're going to do is we're going to buy shares of stock on this example. Okay. So what I'm going to do in this case is let's kind of pull this up. I'm going to go back to our paper money account. And remember what I said to you before, it's not enough to talk about an indicator. You got to talk about how the indicators can work off each other and then show statistically how those indicators work over time in terms of a portfolio. Then it starts to make more sense. Now, in our example, what I want to do is I'm going to right click on the chart where it is right now, right click. We're going to go to where it says buy custom, and I'm going to go to where it says with OCO bracket. Now, this class is on technical analysis. If this was your trade, how would you set a price target on this? Because remember, that's kind of what we're trying to do. We're trying to grab the money and maybe, well, try to be one of the first people to sell or near there and get out prior to other people. Okay. Now, is this a stock trade? This is a stock trade. Okay. Where are we trying to buy it at? Well, it's pretty much where the current price is right now. We'll free float that. So as we talk about it, and it's a little higher than, I'm going to go back down to the mid price, 507.80. Okay. Now, we talked about this when we talked about these V patterns. Okay. I'm just testing you. 510, prior high, right? Now remember, are we taking the extreme area, the wicks? Or are we taking bodies? Okay. Now, some of you have given me a middle name, James Body to Body Candle Boyd. Okay. Sure. If you like that, we'll stick with that. Okay. My middle name's Sterling, but fine. We'll stick with that. We do not take the extremes. We're taking where we get more touches on the bodies of the candles. We've got about 60 points there. Now, that 60 points, what we're going to do is we're going to take that and we're going to layer on top of the resistance. And that's going to give us a potential. If we add 60 on top of 510, it's 570. Now, if we say, wow, 60 points on 510, that sounds like so much. But on a percent basis, it's like 10%, a little bit more. It's about 11, 12. Okay. 12% to be fair, 12%. If I told you, man, this stock went up 12%, I don't think anyone would be like, wow, man, you're amazing. Okay. So that's really not unusual. They can go up that, they can go down that, right? Our target is going to be at 570. What we're going to do is we're going to put a stop right underneath the moving average and or that last low. So before we forget, we're going to put that target right about 568. No, wait, you said 570. Well, sometimes we know that that's a target. It's an area. Some people try to get out a little bit ahead of maybe where others might see it to try to get their order filled. Now, if we zoomed in on this and said, James, where do we see this low here? That low? And we see the moving averages that low. Now, some people like to set tight stops. Others, not so much. If we said we are in that later camp, we don't like to set tight stops. We're going to set the stop below 497, less 2%. And we're going to set that stop at 487.06. Okay. So 487.06. Now, just for time's sake, okay, what account we're in? We could really do about 12 shares of stock. Now, why 12 shares of stock? Okay. The reason why we're doing 12 shares of stock is if we bought 12 shares, it would be about, double check me if I'm wrong here, but it's going to be about a $6,000 investment. Okay, or close to it. There it is. $6,000 on a portfolio that's at 64.4. Well, be about 10%. Can't do more than 10%. So we're going to stick with about 12 shares. Now notice the target right there. Okay, there's the stop. Notice if it gets to that price or less, sell the stock at that price or lower. Also read the line that's in red as well. Okay, so kind of what we're trying to really teach with this point is we're talking about timing. Okay. With this first example, we saw that there was a trend. We already did. We saw that there was relative strength. We did. We also pointed out that when you looked at Goldman Sachs, that was an example of something where the moving average, that shorter term, had just gone green. Okay. Now, how many of you sometimes look back and say, why didn't I just get in? Say that for a long time. Okay. Eventually you kind of have to have a talk with yourself and just say, hey, you going to be serious, or is this kind of like just like kind of how serious do you want to be? And if you say I want to be serious, you say, okay, I'm not just going to look at it. I'm at least going to paper trade it. Okay. And then if you decide for yourself real money, that's up to you what you want to do. For some of the people, they know what they're going to do. Okay. Now, I want to go back to questions real quick, and I want to look at American Express next. Okay. Now, yeah, I want to go back to something just real quick. Let's go to this working order. Yeah, good point there. We could change that, and we'll just do that just real quick. So on that order, we're just going to change it to GTC. Changed it. Monitor tab where we can monitor orders and positions, right click, cancel replace, and we just change that to GTC. Okay, little quick fix there. That would be a standard operating procedure, especially if we're going for a little higher target. Okay, now, so here's what we're going to do. Okay, we're going to go to, for example, on American Express, we're going to go back and look at this. Now, if we go back to Market Watch for just a second, let me bring this back up. If I bring up American Express, where is it on that trend column? Okay. Well, American Express, so the example of Goldman Sachs was kind of more in line with, and I highlighted that line so you can kind of see the numbers. Showed a bounce, showed also a moving average crossover. Okay. This is kind of more in line with what the investors probably thinking. They're buying momentum and strength, buying something that has also a bullish bounce setup, and it's newer in terms of a cross. Okay. Now, are we saying we can never look down here? Well, let's kind of throw this out. I'm going to bring up American Express. Okay. Now, if you look at American Express, notice it does show a bullish bounce, but the problem is the color there, it's red. And I'm going to show you what that looks like. And it's been red for 3 days. Well, let's kind of look and see what we got. Now, if I look at, let's say, American Express, let's kind of take a peeky. Now, why am I bringing this back up? Okay. Well, remember last week, we talked about prior highs, right? We talked about prices that fall down. And we talk about stocks that come back up like the whole entire drop never even happened. Call this V patterns. For some investors, they like these patterns because we talked about if they were to continue back above their prior high, from resistance down to the trough of the bottom of the V, this now gives a target. And guys and gals, I could bore you to death with how many examples of V patterns I saw this week. I mean, literally the whole week was V, 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 V. It was all over the place. If you didn't see them, go back and watch last week's class because they were everywhere. Okay. I almost wanted to write a little V on my face. Now, here's the deal. What we're going to do is we're going to come back to this. Okay. So we're going to look at this right-hand side and we're going to kind of talk about this. Now, remember, if you just went up as much as you just did, okay, I want you to kind of notice this on the right-hand side, okay? There's day one, the shorter-term moving average down. Fine. Then there's day two. Let's mark that. 2. And now what you're going to see if we take it one day at a time, which what happens in real life, 3. And now what you're going to see is if we take this is where we are. Now, you might look at this and say, oh, no, this is horrible. The shorter-term moving average is down. Now, if you said to yourself, well, James, do we have to literally like count and circle ourselves? No. There's a visual aid here that we could use that can also help as well, and we will use that. That visual aid is as follows, okay? And thank you for who made this. Now, the biggest thing is what this does is if you said, I want to kind of help seeing the timing, well, there's red, R for 1 day down, R for 2 days down. And if you're going to look, we're going to see R, it's looking at the shorter term moving average. That's now 3 days down. Now remember, if you only go down 1, 2, 3 days, and you start to see a bullish bounce, what type of price pattern does that maybe start to show? Talk to me. Hit me with it. Well, if you run up like that and then you pull back and you go down for 1, 2, 3 days, well, that probably is your classic what? That's your classic bull flag. Okay. So don't take, I'm showing this on purpose. Do not take it if the short term moving average is down for 3 days. It's horrible. It might just be that you're buying on the dip. And that's where sometimes if you only use a moving average crossover counter, you might take this away and say it's negative. But if you use the indicators in combination with each other, you would know that that is not a great conclusion to come to. Why? Well, because the trend is at 4. And what does the trend at 4 mean? Price is still above both moving averages. Okay. Second, when you look at the relative strength of American Express, it's not been showing weakness. And if you, especially the last 2 weeks. Second, if you take a look at, let's say, this bullish bounce, we see that bullish bounce set up there. This is where when investors only use an indicator in isolation, we would say it could be a mistake. Okay. And this is where we're going to use it in combination to get a better picture of what is actually going on. Now, on this trade, we're going to kind of look at this in 2 ways. Okay. So if some of you said, James, is there a way I could grab this chart, but I could see that? Let me share that with you. Yes. Okay. Yeah. Alvin, I agree with you on that. Yes. Higher low. He says, is it a higher low? And I would agree with you. Okay. Now, what I'm going to do is let me just send that out right there. Now, when you put this in here, you might think, do I always have to have these on, or can I just turn them on and off when I want? If you go to the test tube, okay, the test tube right there, we just call these whole labels. And if you said, well, can I turn them on and off? Notice it says yes. Why is it saying yes? Well, it's labeling the candles. How do you turn them off? Okay. Click on the settings. And now what we could just do is say show bubbles, turn them off. Okay. And that's how we could just turn them off. As simple as that. Now you're going to see it says no. Okay. Apply and okay. And now we see it's back to a regular chart, which we're going to trade off. Okay. But that's a nice visual aid of what we're talking about. Now, if we take a look at this, I'm going to go back to where we are right here. Now, I think it's a little unusual, okay, that the price went down, went back up, fell back down, and going back to Alvin's comment, is this making a higher low into the area of resistance? Now, the whole purpose of the indicator is to be a professional indicator person. Now, that's really not what this class is about. This class is really about using indicators to set up trades or investments that build a portfolio where you can compare the portfolio to a benchmark to assess, could it work over time? That's what the goal is. Now, what we're going to do, if someone buys the stock here, they are really thinking that this trend could potentially continue. Some investors might, if they said, I want more confirmation, they might buy, stop it. Okay, this price or higher. We talked about that last week. Okay, but if someone buys it here, they're really thinking, hey, look, I think the price could go up higher. Okay, if it doesn't, it falls back down, right? They could risk in getting stomped out. Now, in terms of shares, we're going to go back and put in about $6,000. That's the capital size that we could do given this account size. Number 2, what we're going to do in this case is we're going to put a target. I need your help. Don't just sit there and watch me, even though it's fun. Okay? We're going to put a GTC and a dated GTC. Okay? Now, that stop, we're going to use this little run up in the price and the pull back, let's say at 246 and change. Now, you might take your stop underneath the moving average. We're going to take it underneath the last higher low, 246.64. Less 2%. Now, it's going to get us about 241.70. What is that, 74? No, 241.70. Okay? There you go. Now, we already got GTC there. Now, what about the target? Now, remember, we're going back to this because we talked about this from last week. What's the depth of the V pattern, right? Well, if we're talking about James body to body Boyd, it almost sounds like wrestling or something like that. So most of you might say, I was not, you might say, I'm not really familiar with that. Some of you might say, yes, I am. Let's say we kind of said that this was about let me kind of see that. Okay. So if we kind of looked at that and said, where is that bottom? We're probably talking about 225. If we looked at, let's say, the area of resistance, conservatively, probably talking about 250. Okay. If we now took that width and said, well, that's 25, we're going to take the 25 and add on top. Now, wait, stop. I remember talking to a gentleman one time, and he goes, well, James, if enough investors know the same pattern, could this become the law of just kind of expectation that traders could be trading to, many traders or investors could be trading to, let's say, certain patterns that they were taught and then putting on trades and investments in expectation of what that pattern might do? And the answer is sure. Okay. And by the way, that's not the only place patterns are everywhere. Okay. Even if we don't see them, we're going to put the target there at 275, and then we're going to look at the next one in your questions. So I'm going to put that target right at about 275. Okay. So we did our trade number one example was picking something. We talked about kind of picking which columns have more of an impact. Okay. We talked about 6 total. Trend, relative strength. Okay. Those 2 are major. If you're not looking at those, I don't know why. Okay. Then from there, talking about hold, bounce, and then we're really talking about, in that case, do we actually have a crossover? And the last is the counter. How many days has it been up? Now, if we were to, let's say, tomorrow get American Express to go up, it would have gone from a shorter term moving average down to back up. Now, that shouldn't surprise us, because if it were to go to the upside, that shorter term moving average, 10 days, is more sensitive to price change. And so we're kind of thinking, could it go up higher? Now, notice that also this is a carry-on of the class from last week on V patterns. Many of these V patterns might now turn into continuation patterns. Sure, why not? Okay, now I'm going to go ahead and confirm send. Note the capital allocation. Okay, and also notice what we see in terms of a stop order. There's no guarantee what it fills at will be equal to or near the activation price. Now, I want to ask you a question, and this is to me the most important, okay? Do you think that, for example, that you could actually look on your market watch, do you think on a daily basis that you could look at the trend column? And if you said, hey, James, I don't even know what that trend is, you can right click on the trend. And if you said, can I look at this and see what that is? There's even a written description of what the numbers mean. Go for it. Okay? Read it. Now, how many of you also think that you could look for stocks that are showing that relative strength over time? Do you think you could do it? And by the way, if you had an iPad or a phone, do you realize you could be in Germany on your iPad? And do you realize that, for example, that you could get that same data right on your phone? Okay, you don't have to be sitting in the computer. Do you think you could look at the entry setups like hold, breakout, or crossover? Of those 3, by the way, they don't have to be all 3. Do you think you could see that and practice that? And lastly, if you said, James, I want to focus on my timing, do you think you could actually use the whole moving average counter? So our point here today was getting away from thinking that I'm going to learn some indicator, this one thing, and I'm just going to abort everything else. And I'm going to push back on that and say, I'm not sure if that's a great idea. But how do you use indicators in combination with each other to put on trades or investments, okay, to build a portfolio and match, look at that portfolio, compare it to a benchmark, and see, is there any outperformance? That is where it becomes more interesting. I want you to practice that. Now, I'm out of my time here today, and I want to go back to something. If you do not have, for example, this sheet, which I put back on, okay, there's the X page where you can see those scripts. Scripts, remember, are not guaranteed for accuracy. Second, I also want you to recognize there is a playlist for this class. By the way, share this with someone. You have friends, family, coworkers, right? That might have questions about the market in general. Where could I find information? I have people in my neighborhood that ask about this all the time. Share the link with them. Tell them it's right there. Okay. And that, by the way, they'll thank you. Okay. Also, if you said, James, where can I actually see information on webcasts and also workshops? Okay. What you're now going to notice is this page is now going to get into the calendar. And here we are on the 26th, and we can see the information coming up next. We have Barbara Armstrong on trading covered calls and short puts. So just know that this is not a one-off. You could attend all of our sessions or some of them, whatever you choose, and you could also subscribe to our YouTube channel, and that YouTube channel is called Trader Talks with Schwab Coaching. I want to thank you so much for attending today's class as we talk about using indicators in combination with each other. Thanks, Brett Crowther, for answering those questions as well in the chat. I will also look for those questions in the chat and answer those right after the class as well. Thank you so much. Take care and stay tuned for Barbara coming up next. Bye-bye.